Hey guys, welcome back to the channel. In this video, I'll be going over how AMD and SMCI or Supermicro did on earnings and give you guys some ideas for your portfolio. As always, don't forget to smash that like button if you like this type of content so the algorithm gods know that I'm here, and hit subscribe if you're new so you're alerted every time I publish a new video about stocks, investing, finance, and news. But before I get started, I got to hit you guys with a quick disclaimer to appease the YouTube gods. This video is for entertainment purposes only, not financial advice. You should always consult a professional. Now, with that out of the way, let's hop into the video. All right, so the first one we're going to talk about is AMD. You guys know who AMD is. Come on. They're the biggest competitor to NVIDIA, led by, a revolutionary, visionary Lisa Su. Now, let's talk about AMD just real quick in case you aren't familiar with AMD as a company. So AMD is a chip maker, a semiconductor. They do a lot of CPU chips. They're a competitor not only with NVIDIA, but also with Intel. But Intel, in my opinion, is going the way of the dodo. I just cannot see them ever coming back to what they used to be. But AMD has been taking a lot of market share. Again, they focus on CPUs and GPUs. So the GPU market has been really hot, especially with all of this, talk of, artificial intelligence, data center demand, and, training these large language learning models or inference training, etc. So there's a lot going on for, NVIDIA and AMD because of their GPUs. So AMD had their earnings, all right? They had their earnings and they got smacked. Even though they did really, really well, despite all of the headwinds, especially since they can't export their chips to China, but they are working on that. So AMD, NVIDIA, hopefully, they'll be able to ship their chips back to China once they get that license approved. And this will be a tailwind for AMD. But let's look at what happened with AMD, because they ended up getting smacked about 4% on earnings, which is kind of odd. All right, but AMD dips after earnings revenue beats expectations, but the data center growth slowed down. And again, that is the big one, is everyone's talking about data centers. NVIDIA is really focused on data center, growth or producing chips, selling chips. You have big companies like OpenAI that are building massive data centers. You also have even companies like Tesla or XAI that have a large data center, all right, and they need these chips. So let's take a look at what happened. All right, AMD dipped 4% after it released its second quarter fiscal 2025 financial results post-market on Tuesday, as the semiconductor company's data center revenue growth slowed down. That was what caused the sell-off. And it wasn't that bad of a sell-off. 4% is not that big of a deal, but it is still a deal nonetheless. And I think this, honestly, if you're bullish on AMD, could present a good opportunity to, buy on this pullback. All right. Of course, not financial advice. Full disclosure, I actually don't own anything related to AMD. I'm more of an NVIDIA, investor myself. But if you are considering a position in AMD, I think this pullback is something to look at. All right, the data center segment revenue for the second quarter totaled $3.24 billion, which was a quarter-over-quarter decline of 11.8%. So that is really what scared or spooked a lot of investors. They think that NVIDIA is taking the market share, but really I don't think that is the case. I just think this has to do with mostly not only China, but there are a lot of companies coming towards AMD, for their cheaper but same performing type of chips, all right, that are supposed to be on par with NVIDIA's Blackwells, all right. So what was interesting is that even though they had a decline of 11.8%, it represented a year-over-year gain of 14%. However, its first quarter data center revenue demonstrated a 57% year-over-year increase. All right, so again, they just had a bad quarter. We have tariffs still ongoing, but their demand for their chips is not stopping. All right. It's not stopping, in my opinion. All right. We delivered, and this is from Lisa Su. We delivered strong revenue growth in the second quarter, led by a record server and PC processing sales, said AMD CEO Lisa Su. We are seeing robust demand across our computing and AI product portfolio, and we are well positioned to develop significant growth in the second half of the year, driven by the ramp of our AMD Instinct MI350 series accelerators and ongoing EPYC and Ryzen processors share gains. Right, so they're taking more of the market. They're still competing with NVIDIA, of course, because NVIDIA is the 1,000-pound gorilla in the room. But if you wanted to look for an opportunity outside of the Mag 7 or outside of NVIDIA, I think AMD would be
definitely something for people to consider. All right. Looking ahead to the quarter in progress, AMD expects revenue ranging from 8.4 billion to 9 billion with a midpoint of 8.7 billion, well above the estimates of 8.37. All right. Our current outlook does not include any revenue from AMD Instinct MI308 shipments to China, as our license applications are currently under review by the US government, AMD said. So this is a big deal because they're not including their shipments to China in their forecasts. So again, even without China, they are still growing and they still have demand. So again, I think being bullish on AMD is definitely warranted, especially with Lisa Su at the helm and just constantly innovating on the semiconductor, producing a cheaper performing chip, right? That is what AMD's kind of value model is after. They're trying to produce, Blackwell performing chips at a substantial lower cost. So I think, AMD is doing really well. All right, so let's look at the stock. So as you guys can see here, they are down quite a bit. All right, from the day down to after hours, they're down about almost 8%. So that is a substantial dip. Again, I think this stock is definitely going to bounce right back up. If we look at the last 5 days, we had Liberation Day. It dumped pretty hard, actually. It dumped another 7%. And then we had that really epic gain on Monday. But it looks like it gave up some of those gains. All right. But let's look at the year to date. Again, AMD absolutely killing it. 44% up. All right. On the year, 29.29%. And then looking at the 5-year, again, it's still climbing back to its all-time highs, which I think it's absolutely going to do. And then if we look at the max, 100 or 1,107% up, right? AMD, again, is one of those underdog companies, in my opinion, that's going to do very, very well in the semiconductor space. Okay, so let's look at some. If you're interested in, investing into AMD directly, you can always buy AMD common stock. All right. But because this is a kind of an income focused, channel, we're going to just go over some different ETFs that are available on the market. This won't be a deep dive, unfortunately, because then this video will go on for probably an hour. So I'm just going to talk about them at a high level. First one up, this one is probably the most popular. Actually, this is the only income or cover call ETF on the market that I know of. If anyone knows of anything else, please put it down below in the comments. All right, but we have AMDY from YieldMax. This is the AMD Option Income Strategy ETF. This has a really high distribution rate of 82.8%. All right, when I say distribution rate for any of our new subscribers, think of like dividend rate, right? Or dividend yield. Now, these distribution rate and dividend yield are completely different. All right, do your own research on that. But basically, AMD is writing, or AMDY YieldMax is writing cover calls on AMD to produce that really high distribution rate. Okay, just taking a quick look at this ETF, you guys can see here from the distributions. All right, it pays about once a month or every 4 weeks. It's not bad actually. This is not a bad ETF if you're willing to give up upside, because when you invest in these cover call ETFs, you're giving up pretty much most of the upside for the income. So these are known as income instruments or income products. So they're not going to really grow in value. So be very careful investing into this. Yes, you get that really juicy high distribution rate of 82%, but your ETF is probably not growing as much, and it could be going down on the NAV, right? So the actual price of the ETF could be going down in value. So make sure you look into that. Make sure you understand what you're investing into. These cover call ETFs, typically you have to view them as total return products. Even the I don't know if it's a founder or one of the advisors, whatever you want to call them, Jay, who does his tours on YouTube, Jay Petrocelli, he usually says that you should reinvest a percentage of that dividend back into the ETF, right, to keep that NAV stable. So anyways, just wanted to talk about that. All right, so AMDY, again, you guys could take a look at that ticker. We also have one from Roundhill. This is the AMD Weekly Pay ETF, ticker AMDW. This just came out. The weekly pays, in my opinion, they are very good products. Same thing, it depends what you are looking for as an investor. If you're looking for uncapped upside with a distribution rate of any sort, then the weekly pays could make sense for you. If you're looking for a higher distribution rate and you're willing to give up that growth, then you can look at something like AMDY. So what is the weekly pay ETF AMDW from Roundhill? Well, real quick, we're just going to go over it real fast. So right now it has a distribution rate of 56%. I think it only paid out once. This is the first payout. So again, it doesn't really have a distribution history, but this is a 1.2 times or 120% exposed or leveraged ETF on AMD, on advanced micro devices. All right. So this can be really good if AMD goes up in value. You know, if it goes up in value 10%, then you'll get like a 12%, capital gain. But if AMD goes down 10%, you're going to go down 12%. All right. So you got to be really careful on how you implement this type of an ETF in your portfolio. All right. But they do pay every single week. All right, this is the first week they paid out. You're going to get an enhanced exposure because, you're getting that 120%. This could create a very powerful combination, all right, because, again, it's uncapped upside, all right, sporting a 99 basis point expense ratio, which is actually the same as AMDY, if I'm not mistaken. Yep, it's right there. So, yeah, you're going to get a gross expense ratio of 99 basis points, okay? So, again, something to consider. You guys can see it here. It actually does hold some of the underlying of AMD. It holds about 20%, and then the rest is in what is known as swap agreements. This is not a cover call ETF, okay? And I know that because if you scroll all the way down, it says right here, no Roundhill weekly pay ETFs do not sell options. All right. Instead, the funds offer uncapped levered upside to their underlying reference assets. So this is what I like the weekly pays because of that. But again, it depends what kind of investor you are or what you're looking for. There's no, ETFs are not inherently bad or good. It's just whatever makes sense for the investor. All right. But if you're willing to take on a little more risk, all right, and I'm not saying go do this, but you guys see that this is a pretty bad dip. Okay. Over the last 5 days, we've just been dipping even further. However, if you're bullish, if you're really, really bullish on AMD and you think it's going to recover and you want to hold it for a little longer than a couple of days, then you can go with something like a leveraged long position, all right, from Granite Shares. This is AMDL. This is the Granite Shares 2X long AMD daily ETF. You have to be exceptionally careful looking at these because they are 200% exposed to the underlier. Okay, so again, not financial advice, but if it is something you want to, add to your portfolio, you can certainly look for it. But I like to use these in certain respects. Like if I saw a massive dip in a holding or a security like AMD, and I expect it to run back up, I could buy AMDL and then just run it back up and then sell at a profit. This is known as a swing trade. Okay, that is basically the example. But the fund seeks daily investment results before fees and expenses of 2 times or 200% the daily percentage change of the common stock of AMD. Now, the question usually comes up, do you hold these long term? My official answer is no. You don't hold these long term because you get what's known as theta decay or time decay. So eventually you'll have negative compounding on this. So usually you should hold it, according to Granite Shares and most other fund managers that offer these products, you should only hold them for about a day, maybe a week, but no longer than that. Have I held these for longer than a week? Yes, I have. All right. And it is what it is. I've even dollar cost averaged into them. But again, I will eventually face, that negative compounding or that theta decay. So you have to be careful on how you implement these in your portfolio and what you're trying to do. A lot of traders, a lot of investors will use these as swing trades. All right. So now that we have a couple ideas for AMD, let's talk about Supermicro. Now, Supermicro, I've never been a fan of. Okay. I've talked about Supermicro several times. I think their whole company is kind of a scam. It's something, all right? There was a bear case put against them, and it just pretty much ripped this company to shreds. Not only that, they had a lot of, fraud in their accounting department. They almost got delisted from the NASDAQ for the second time. Just so much bad things with this company, but people seem to like it. All right. They seem to like what they're doing. So, hey, my hat's off to you guys if you can weather that volatility. All right. But let's talk about Supermicro. Basically, this is a hardware manufacturer for hardware manufacturer for AMD and for NVIDIA and for Intel, right? So they're the motherboards. They create, servers. They integrate a lot of these different semiconductors in their stuff, as well as memories. They're basically, the inside of a PC, right, or a server. And I mean, they do offer great, products. Don't get me wrong. I worked on Supermicro computers back in the day. So they do offer some really, really excellent, hardware. However, it's just the way the company is and the stock is that always makes me weary about it. But again, there is a lot of, I don't want to say demand, but there's a lot of people who do invest in Supermicro. All right, so let's talk about it. Supermicro sinks as Q4 results. Q1 outlook falls short. Supermicro computer SMCI sank 14% during early post-market trading after the data storage company presented its fourth quarter fiscal 2025 financial results on Tuesday. The San Jose-based company reported fourth quarter results and its first quarter outlook that fell short of estimates. All right. However, its full year fiscal 2026 revenue projection was nearly $3 billion more than the estimate. As much of its revenue appears to be backweighted for the year. For the quarter ending in June 30th, Supermicro reported adjusted earnings per share of 41 cents, which was less than the consensus estimate of 44 cents. GAAP EPS was 31 cents compared to the estimate of 34 cents. All right, basically revenue totaled 5.8 billion, which was less than the estimate of 5.9 billion. So, they're just 0.1 billion short. Adjusted gross margin came in at adjusted gross margin came in at 9.6 versus the estimate of 10. All right, looking ahead, the memory maker, and this is a big deal, guys. Looking ahead, the memory maker expects a first quarter fiscal 2026 adjusted EPS ranging from 40 cents to 52, which is a huge jump. All right, with a midpoint of 46, much less than the estimates of 59 cents. All right, the company expects net sales ranging from 6 billion to 7 billion with a midpoint of 6.5 billion, but that's still less than the estimate of 6.59 billion. All right, however, for the entire year of 2026, Supermicro projects net sales of at least $33 billion, which is nearly $3 billion more than the estimate of $30.03 billion. So SMCI, they're a big competitor to, like Foxconn. SMCI, like Supermicro, they're going to be used in a lot of data centers. All right, when you think data centers, think of companies like Broadcom, think of companies like Cisco, AMD, NVIDIA, and Supermicro. All right, Supermicro is no stranger to the data center industry. Again, they produce some of the most best-in-class premier server racks out there. So I still see that there will be demand for Supermicro. Again, I think their hardware is really good. It's just the company itself, the management, is just kind of shady at times. Don't take my opinion as fact. All right, do your own research. But from what I've read, and I've shared it before, I just do not trust this company whatsoever. But a lot of people seem to. All right. With support from our expanding global operations that help mitigate tariffs and regional costs, combined with growing enterprise customer base, AI product innovations, and robust DCBBS power total solutions. Don't ask me what DCBBS is. I don't even know. We're on track to grow more large-scale data center customers from 4 in fiscal year 25 to 6 to 8 in fiscal 26. All right, said Supermicro CEO and founder Charles Liang. Now, again, don't forget, the United States went on a huge PR tour in the Middle East, right? They brought along AMD, Lisa Su. They brought along Jensen Huang, OpenAI. They brought along Sam Altman. You also even had Alex Karp from Palantir over there, and Elon Musk, and a bunch of other people from BlackRock, right? So they do this really big tour, and they're talking about opening up all these data centers over there. Where do you think they're going to get the hardware for this? They're very likely going to get it from Supermicro, in my opinion. So, again, whenever you think data centers, you think Supermicro, you think Broadcom, you think Cisco, you think there's also another one out there. I can't remember their name at this moment, but you also have AMD, of course, NVIDIA, and Microsoft and Oracle, right? You think of these companies because these are pretty much the names that are synonymous with data centers, in my opinion, of course. All right. So if you want to get some SMCI exposure, what can you look at? All right. Let's take a look real quick. We see that they dropped substantially in that day, almost down 18% for the day. That is a substantial drop. All right. If we look at the 5-day, they're down only 3.37%, which is not true. They're actually down 19.42% in total. And then if we look for the month, they're still up 21.55%. So that's not bad. All right. And then 6 months we can look at and see, you know, they've just been kind of steadily climbing. The thing with Supermicro is whenever they have these pullbacks, especially after earnings, they usually seem to get back on track. So again, I'm not saying go out and buy SMCI, common stock, or anything else, but if you want some exposure, if you want to, you know, review the company, look at the company a little deeper, maybe, you know, this might be something for you. All right. You can buy SMCI, which is the common stock, or you can look at the income products. And there's only one income product that I know of, and that is from YieldMax, the SMCI Option Income Strategy ETF. All right. This is boasting a crazy distribution rate of 114%. All right. But just like AMDY, this has capped upside. All right. Substantial income distribution. All right. But you need to make sure that you understand the idea behind cover call ETFs. You're going to get capped upside. These are growth, or excuse me, these are income instruments. All right. These are not growth products. So you have to always keep that in mind. If we look, we can see the distributions have been really, really crazy. And it does pay, it seems, every other 4 weeks. All right. So again, something to keep in your back pocket if you want to get some exposure to SMCI, whether indirectly or directly. All right, just like the AMDY. All right, YieldMax SMCI Option Income Strategy ETF is an actively managed fund that seeks to generate monthly income by writing, selling call options on SMCI. SMCY pursues a strategy that aims to harvest compelling yields while retaining cap participation in the pricing gains of SMCI. All right, so that's basically it. Now, just like AMDL, we also have SMCL. All right, this is the Granite Shares 2X Long SMCI Daily ETF. Again, do your own due diligence on this. Be very careful how you include this in a portfolio. A lot of traders use this, you know, for swing trades or for short-term duration trades. Me personally, I'm not going to be buying into this at all, just because, again, I am not a fan of SMCI as a company or as a stock. More so as a stock, I would suppose. All right. But just like AMDL, the fund seeks the daily investment results before fees and expenses of 2 times or 200% the daily percentage change of the common stock of Supermicro. All right. And just like AMDY, you want to be careful because this also has theta decay or time decay. You would not hold this longer than a day officially, but you can't. I've seen people hold this, you know, longer than a week. And, you know, if you're bullish on AMDL or AMD, you know, you could, in theory, potentially hold this for longer than a week, right? A long-term hold, but you would start to suffer from negative compounding. So something to keep in the back of your mind. Again, not financial advice. All right, guys, that will do it for this video. I hope you got a lot of value from it. I hope you learned a lot about these two particular companies. Again, Supermicro is intertwined with NVIDIA and AMD. I think, honestly, the thing that's propping up Supermicro is NVIDIA's partnership, to be perfectly blunt. AMD, I think Lisa Su is such an amazing CEO. She's doing a lot of crazy things with the company. They've been on an M&A spree, a merger acquisition spree, just purchasing or buying companies or bringing on top talent engineers to basically build the next generation of artificial intelligence chips. So, you know, I am really bullish on AMD, although full disclosure, I don't have a position. So that will do it. Hope you guys enjoyed it. I will see you guys in the next video. You guys have a great day.